good day, guys. My name is Nick, technical analyst of SuperForex. Today, we shall be looking at the technical analysis on the currency pair, the AUD to the United States dollars. And as usual, first we'll be talking about fundamental analysis before we move right down ahead to technical analysis, which is purely what we're going to be seeing on the chart. We have noticed that the dollar has hit a fresh one-month low on Tuesday, as every other currency pair, the AUD, the euro, has extended gains, while a broad sell-off in stock markets has failed to boost the United States dollar's currency by a safe haven appeal. Now, against a basket of its rivals, the dollar fell to about 0.3% of 101.79, its lowest level since April 26th. Now, the euro, which was the standout gainer on Monday after European Central Bank President Christine Lagarde indicated negative interests. We have seen that the Eurozone, as featured for 8 years, will most likely be gone by the end of the summer. And the extended days, of course, will mean that the single currency, which was up about 0.4% in the last 48 hours at 0.71255, and which of course had lost about 0.2% and currently ranging at 0.70687 zone. Now, what to expect after Lagarde said that the interest rates were likely to be positive in the territory by the end of the third quarter. Many observers will continue to consider the EDB as being too hesitant, but the fact that a liftoff is now very likely to happen in July, and that the ECB seems willing to hike rates further after its positive move for the euro. Now, what to expect from this? We are most likely observing a change of the trend, and the most recent trend had lasted about 249 pips thereabout, and we are expecting a fallout back to at least this zone, the 0.70019 zone at 0.70019 zone. Now, what we should expect is having a good TP and stop loss input. So we have our stop loss input to be somewhere at here, which is at 0.71178. And our TP, of course, would be at 0.69983, which, of course, is good execution. Now, if we let the trade run from this execution point right on to this point, we're having nothing less than 66 pips from this trade, which is good money. Now, that's our technical analysis on today's currency pair, also to the United States dollars. Now, let's move ahead to the stock market. Hello, guys. Now, today on the stock market, we'll be having a look at natural gas, NG. And we have noticed that the European Union plans to start jointly buying gas before winter. And the Bloc Energy's policy chief said on Monday that as it seeks to cut reliance on Russian fossil fuels and build a buffer against further energy supply shocks, the European Commission, the EU's executive arm, last week proposed a plan for how the bloc could quit the Russian fossil fuels by 2027 by speeding up investments in renewable energy and energy savings, and then switching to non-Russia fossil fuels. Russia, which supplies 40% of EU gas since its invasion of Ukraine, has cut off supply to Poland, Bulgaria, and Finland, and after they refused to pay for the fuel in rubles. Now, in an interview with Reuters, the EU energy policy has Chief Kadrik Simpson said the bloc intended to start jointly buying gas this year, supported by an EU platform launched last month that could pool countries' demand and coordinate use of infrastructure to import non-Russia supplies. Now, joint buying will be voluntary for countries. Analysts have said the scheme could struggle to secure significant volumes from the tightly supplied global market, or to launch quickly, given the complexity of coordinating between companies, governments, and Brussels to make the purchases more efficient. Now, also, we have heard Simpson say in recent times that by acting together, the EU countries could gain access to supply that wouldn't otherwise be available. So there are limited gas volumes available in the global market for this year, and some of them are coming to the market only because of the political decisions, as she said. Now, pointing to a US-EU deal from March for the United States to supply an extra 15 billion cubic meters of liquefied natural gas to Europe this year. Now, what effect has this had on the market? We have been seeing the market going on a bullish trend all along, and this, of course, is going to continue today. If we are to check our 4 hours time frame, we notice that Brussels has said that most countries should mostly use renewables and energy savings to replace those volumes and expect gas demand to drop 30% by 2030 under the EU's climate change target. But until then, we are still looking for a very long bullish ride. Now we're heading into a new zone, the 9 zones. Now we're looking at about it hitting, if nothing less than the 9.5 zone, and most likely the 10.1 zone thereabout. So if you are to make an entry to this trade, you have the stop loss being put somewhere here at 8.658, and you let your trade run up to 9.5 thereabout. That's our technical analysis on today's commodity, natural gas. I remain your host, Nick. Bye for now.